You ever see the news just filled with flashing red lights, all kinds of chaos, only to check the stock market and see it hitting all-time highs? Well, the first 2 weeks of October 2025 were a masterclass in that exact kind of confusion. It was a period that left pretty much everyone asking, what was really going on? Okay, so let's just dive right into this contradiction because it's pretty stark. On one side, you had the headlines just screaming chaos, right? The US government literally ground to a halt. Geopolitical flashpoints were heating up all over, new trade frictions popping up daily. And on the other side, well, the S&P and Nasdaq weren't just okay, they were blasting through record highs. It was a total disconnect. And that really brings us to the key question we're going to try to unpack here. Was the market just, blissfully ignorant of all this bad news? Or was it tuned into a completely different story that most of us were missing? So here's how we'll break it down. First, we're going to look at how markets seem to just defy gravity. Then we'll get into the two powerful forces that were really driving everything, what I'm calling the AI and Fed show. We'll look at the headlines they chose to ignore, the one big threat they couldn't, and finally, the great tug of war this all created. So first up, let's just set the stage. To really get how strange this period was, you have to appreciate the incredible resilience, the sheer strength that markets showed in the face of what looked like total chaos. So get this. On the very first day of the month, the US government officially shuts down. Now, you'd expect some panic, right? Or at least some serious jitters. But instead, the reaction from global investors was basically a collective shrug. To them, it seemed this just didn't matter. So why didn't the market care? Well, it wasn't ignorance, it was focus. Investors were absolutely laser focused on two incredibly powerful stories that just drowned out all the other noise. Welcome to the AI and Fed show. Okay, so the first big engine was this overwhelming belief in something called a dovish pivot from the US Federal Reserve. That's just a bit of market speak. All it means is that everyone believed the Fed was about to stop raising interest rates and start cutting them, which would unleash a wave of cheaper money into the economy. And look, this wasn't just a hunch. After a surprisingly weak jobs report came out, the market immediately priced in a 99% chance of a rate cut that very month, in October. For traders, that is as close to a sure thing as you can possibly get. The era of easy money felt like it was right around the corner. The other engine, and you could argue this one was even more powerful, was this euphoric belief in a brand new AI supercycle. This was the idea that AI wasn't just another tech trend, but a fundamental economic shift that was going to create trillions and trillions in new wealth. And this slide just perfectly illustrates the frenzy. So first, news breaks that the South Korean chip giants landed huge deals with OpenAI. Then, chipmaker AMD announces its own massive deal. The market's reaction? It was immediate. AMD's stock just exploded, soaring 25%, and that was before the market even opened. That's the kind of mania that fuels a bull market. I mean, this tidal wave of optimism created just staggering fortunes, with the amount of wealth concentrated in big tech reaching mind-boggling levels. And, as a perfect symbol of the times, Elon Musk's personal net worth crossed the $500 billion mark for one person. So, with these two massive engines, the promise of easy money and an AI revolution roaring at full throttle, the market had enough momentum to just drive right over a lot of bumpy roads. Let's take a look at what exactly got flattened. And what's really wild here is just the sheer volume of major headlines that were completely dismissed. The US government shutdown, right? New sanctions pressure on Russia, trade spats between China and Australia, even efforts to broker a ceasefire in the Middle East. All of it was just treated as background noise. And this created this incredibly powerful feedback loop. The more the market ignored bad news, the more it reinforced this buy-the-dip mentality. So every minor downturn wasn't seen as a warning sign, it was seen as another golden opportunity to buy in before the next big rally. But then, late in the second week of the month, a new threat popped up. And this one was so big, so immediate, that even the combined power of AI optimism and Fed rate cut hopes couldn't ignore it. The announcement of a massive increase to 100% tariffs on goods from China, that instantly changed the entire conversation. See, this wasn't background noise. This was a direct threat to the global supply chain. It reignited fears of a full-blown US-China trade war. And the reaction was immediate. Unlike the shutdown, this news had a direct, negative, global impact. You can see it right here in the futures markets, which are basically bets on where the market will open the next day. From Europe to Asia, everything turned sharply red. This was a risk investors were finally taking seriously. You could see this subtle shift in sentiment right away. On October 10th, for the first time in this period, the S&P 500 actually had a negative day, and that was on a day when, on average for the last decade, it should have been positive. It was a small crack for sure, but it was a crack nonetheless. It was a sign that the buy-the-dip armor was starting to weaken. And all of this set the stage for the core conflict that would define the end of this whole chaotic period. The market was suddenly caught in a massive tug-of-war between two opposing and incredibly powerful forces. So on one side of the rope, you still had those powerful bullish stories, the long-term promise of the AI supercycle and the short-term sugar rush of Fed rate cuts. But now, pulling hard on the other side was the very real, very immediate bearish threat of a global trade war. And so the key takeaway from those wild 2 weeks is really this unresolved tension. The market was left in this precarious balance, forcing every single investor to decide which story they believe in more: the long-term, world-changing promise of technological innovation or the immediate, disruptive reality of geopolitics. And how that question gets answered, well, that will likely define the markets for years to come.